Welcome back, everyone. So we're going to continue with Learning Unit 5. In this session, we're going to focus on question 5.3, specifically looking at our Creditors Journal, Creditors Allowance Journal, our Debtors Journal, Debtors Allowance Journal, and if we have time, we can talk through the general journal questions. Okay, so the first question, so I put it up on the screen as well, is on page 157 of my textbook, so it should be about 160, 161 in the new textbooks. They had questions which pertain to the example 5.1 in your textbooks, which you could find just before that, which ranged from page 142, so about 145 up to let's quickly see 156, which would be about 160. Okay, so that information was then taken, and now they're specifically asking you questions based on the example they've provided to see if you understand the journals and how they work. Now we've done little examples to explain how these journals work and how to input the information. Now in this case, they've already completed it for you, and now they've asked you specific questions. So for homework yesterday, you had to go look at the cash book receipts, the cash book payments, and the petty cash journals. Do you have any questions on any of those information that was asked before we move on to the credit section? Okay, if you have questions, then let's continue with specifically the Creditors Journal. So in your textbooks, you can read along or you can look at the screen. So questions regarding our Creditors Journal. So we said Creditors Journals relates to transactions with our suppliers where we've purchased goods or services on credit from a third party and we actually owe them money. Now in this scenario, you can see on the table I've included, we had 4 creditors for this month of April. And the creditors control column was completed. We had the input VAT, so the VAT were allowed to claim, and then 2 were trading inventory purchases, and then the rest related to postage, equipment, and equipment. Okay. Now the first question is, the equipment account was debited on day 19 when invoice E4495 was recorded. Many people regard a coffee table as furniture though. Would it have been acceptable to open a furniture account instead of debiting the existing equipment account? And what would you recommend under such a scenario? Let's quickly see if I've got, okay, no. So on the 19th, if we go back to, I'll just read to you what's in the example. They said we purchased 4 coffee tables on credit for 8,040 Rand, each from Two-Door Enterprises, and received the invoice. 3 of these tables are for resale purposes, while the other one is for the reception area. Now the question is, in this account, you can see they took it to equipment. So it's the one that's on the 19th. And so we've taken it here to equipment. Now the question is, if the company created a furniture account, do you think that would be acceptable for the coffee table, or do you think they should have taken it to the equipment account? And why do you think so? Or why do you think they could have changed it? And how would you recommend a company sort of address this in the future? So let's start with the first question. Would it have been acceptable to open a furniture account instead of debiting the existing equipment account? So do you think a company could have opened the furniture account instead of the equipment one? Yes or no? Do you think it would have been fine? Okay, so in the chat function, just let me know, do you think our company would have been allowed to take it to furniture as opposed to equipment? Yes or no? Okay, so Tebo thinks no. Any other takers? What do you think? You've got a 50-50 chance of getting it correct, guys. So take a chance and pick an answer. What do you think? Yes or no? Okay, so Tomato thinks I think they should record it as equipment because the business only records the transaction and not what it would be used for in the future. Okay. Anyone else? There's a lot more of you in class. What do the rest of you think? What's your opinion? Do you think they were allowed to use a different account name than the one they currently have? Yes or no? Okay, so Piet thinks yes. Anyone else? Okay, so let's discuss this. In practice, how it works is you would generally have a look at what type of transactions you mainly have, and then you would decide on an account name. Now, in this scenario, this company decided to use the account name equipment. Now, we would generally have preset criteria of what would be in a specific account. So for this reason, they've included it in equipment, but it wouldn't have been incorrect if they've created a furniture account as well, because it is actually office furniture. So they could have created an office furniture account, but now the problem is because they use equipment, there might be office furniture already recorded in the equipment account. So for that reason, to keep it comparable from one year to the other, you try and keep it consistent throughout the period. But how do we actually overcome this? So now you're sitting with maybe computer equipment in that equipment, you're sitting with office furniture in that same account. How do I actually give it a better description so that people know it's not only computer equipment or machinery, but it also includes office furniture? Now, how to overcome that in practice, you can actually change the account name to office furniture and equipment, which then gives you a bit more of a descriptive account name, but you know exactly where it relates to. So you know it's not only equipment in the office, but it also has some component of furniture. So in that scenario, you would be able to actually just change the name to reduce the confusion as to what is included in that name. But it would be acceptable to use a furniture account in practice as we do actually do that. Okay, so that's the first question. So the second question is, why were there no transaction or no entries made for installments mentioned in the transaction on day 20? So let's quickly look what's the transaction on day 20. So on day 20, they said, we purchased a computer slide projector for use in future board meetings. The projector was purchased on credit from Western Frontiers for $59,280, received credit invoice TI-12, but a 10% deposit was paid by check. The balance is to be settled over 6 months in accordance with a zero interest agreement starting on 31 May 2009. So the question is, why have we not included an entry for the installments in our creditors journal? Why do you guys think? So what do you think is the reason that we have not included the installment in our journal as shown on the screen? Okay, so I'm going to repeat the question. The question is, why were there no entries made for the installments mentioned in the transaction on day 20, which I've put on the right-hand side, which said we purchased a computer slide projector, we've paid a deposit, and then we're going to pay off the balance in 6 installments. Why have we not included the installments in our creditors journal there at the bottom? Okay, let's start with step 1. What is an installment? Please explain to me. How would you explain an installment? What is it? Okay, so TB says it's a fixed amount of money you pay over a certain period of time. Okay, so TB, that's correct. An installment is a certain amount money, so we generally agree on what amount is paid, and it will be over a certain amount of months or years depending on the contract. Okay, so that's what an installment is. Now, based on that, do we put any payments that we make in a creditor's journal? What transactions do we account in our creditors journal? What did I say? Okay, so tomatoes say when we buy on credit, we record that in our creditors journal. Okay, yes, so when we buy on credit, we record the credit transaction in our creditors journal. Now the next question is, seeing an installment is a payment, would that classify as buying something on credit? Would you record it in your creditors journal, yes or no? Okay, so no. So installments are the payments. So I said yesterday when we recapped the different type of journals, payments made to creditors would not be included in your creditors journal. Okay, now we've included the full amount in the creditors journal for the West Frontiers, which is that 53,000. But the installment will be showing in our cash book payments journal as opposed to our creditors journal, And then the other thing that you had to see is that the installments only start on the 31st of May. And for that reason would not be included in your April journals. So we're only starting the installments the following month, as well as an installment is a payment which is shown in our cash book payments journal as opposed to our creditors journal where we just show a credit transaction. Okay, so that is in essence the answer. Okay, let's look at the next one. So now we're moving on to our creditors allowance journal. What type of transactions do we record in our creditors allowance journal again? You can just type it in there in the chat function. So just to repeat the question, what type of transactions would we record in our creditors allowance journal? Okay, so Tumelo say when we return goods that we bought on credit. That's correct. So any returns or any rebates we receive for goods or services we bought on credit would be in our creditors allowance journal. Okay, now let's see what questions they have specifically on the creditors allowance journal that is shown on the screen. So how was the amount entered into the creditors column on the 21st of April calculated? So on the 21st of April, there are 210 Rand and 19 cents. How was it actually calculated? Now let's see what the transaction said just to help you guys out. So on the 21st, it said requested a rebate of 25% on one of the coffee tables purchased from Theodore Enterprises on 19 April. The table was damaged and credit note 31 was received. Okay, so let's quickly just say what was the information on the 19th. We've purchased 4 coffee tables on credit of 840 Rand and 75 cents and received invoice number E40495. Okay, so based on the information on the screen, how would you calculate that 210 Rand? How did they get to that amount? You can type your calculation in the chat function for me. So the question, just to repeat it, they asked you how was the 210 Rand and 19 cents that is captured next to Theodore Enterprises in our creditors allowance journal. How was that amount calculated based on the information on the screen? Okay, so Tumelo says we take the 840 and 75, divide by 4 to get to 210. Okay, so Tomato, that seems to be correct. Let's I even put it in here. Okay, so now I'm actually giving you the next answer. Okay, so you could have done it divide by 4, or 4 is 25%, okay, which is exactly the same. So yes, we take that 840 Rand, we divide it by 4 to get to the 210 because we only returned 1 table as opposed to the 4. But they also told you it's a rebate of 25% on one of the coffee tables. So you can either use the 25% or you can divide it by 4 to get to the same amount. Okay, let's look at the next question. Regarding the transaction on the 22nd, why was the amount of 5,000 entered into the sundries column and not in the creditors control column? So they're asking you, this 5,000 here, why is that recorded in here and not in your creditors control? Now, if we just read Let me just see. Okay, so I'm not going to give you the answer by accident because I didn't do the numbering correct here. Okay, so on the 22nd, let's look what the information said. It said it was found that the slide projector purchased on the 20th was an older model than the one advertised, okay? But the invoice received was based on the purchase price of a newer model. So you paid the price for a new model, but for old equipment. The price difference between the two models is 5,000 Rand, excluding VAT, and this was discussed with Western Frontiers and a credit note was received to account for that discrepancy. Okay, so the answer for this that you can see now on the screen, the reason it's 5,000 in the sundry accounts. Our sundry accounts are always excluding VAT. Now, in the question, they told you that amount is exclusive of VAT, and that's why you include the 5,000 in sundry accounts and then work out the creditors control, which is the amount inclusive of VAT. Okay, so that is why the 5,000 was in sundry accounts as opposed to your creditors control. So you see, if you did not read the fact that it was exclusive of VAT, you would have made that mistake and put it in the incorrect column. So you can see it's important to be very mindful of whether an amount is inclusive or exclusive of VAT. Okay, let's move on to our debtors journal. So if we read the question regarding the debtors journal, so that would be on page about 161 or 162. They ask you, how was the cost of sales of 16,852 Rand and 17 cents according to document D2 on day 11 calculated? Okay, so they're asking you, how was the cost of sales calculated based on the information on the 11th? Okay, so if we look at the information on the 11th, let's see if I put it in here. Yes. The owner took a table and a chair from trading inventory for his own use. These goods would have been sold for 750, including VAT, had it been sold to the public. And they sold merchandise on credit to ISO Fenter for 29,070 Rand, less 7.5% trade discount. Okay, so the transaction they're referring to here is the one with ISO fences, so it's that second part of the information. Okay, so now the question is our cost of sales. How did they work out that amount? Who can tell me what is the calculation? It's similar to what we've discussed in class today when we looked at the example. What are the key things you need to look out for? And the markup percentage is 50% on the goods, on cost. Okay, so let's quickly see our markup. I'm just going to put it in the chat function. So the markup is markup on cost equals 50%. Okay. Now using that information and what's currently on the board or on the screen, how would you calculate the cost of sales? You can just type in the steps and then we'll go from there. So what is the first thing you had to see? What do you need to ask me? What information might I not have given you? Okay, so tomato, yes, it's correct. You need to ask me about the discount. Do we calculate the cost of sales before or after discount? Now, in the question, they tell you that the markup is 50% on the cost of all sales before any relevant cash or trade discounts. Okay, so it's before trade discounts. Okay, now that was the first thing you had to see. Now, if it's before trade discount, how will I calculate that cost of sales amount. What value will I take? So what's my starting point? What value will I start my formula with? Okay, so to work out the cost of sales, what is our first starting point? What value will I start my calculation with? What will it be based on? Okay, so if my cost of sales is based on an amount before trade discount, what amount was before trade discount in this scenario? Just type in the answer for me in the chat function. What amount represents a value before trade discount based on what they've given you? Okay, thank you, Tamiro. So the 29,070 Rand is our sales amount before trade discount has been taken into account. Okay, now what markup percentage will we multiply that amount with? Okay, so what fraction? So we want to work out the cost, which will be represented by what percentage, and we'll divide it by the sales, which will be represented by what percentage. So what will you multiply that 29,070 Rand with? Okay, Helder, what do you think? What will we multiply that 29,070 Rand with based on our markup information? So Helder, what do you think? Okay, Queasy, do you maybe want to help out Helder? What will we multiply the 29,070 Rand with to work out the cost price? So we're using the markup information. What will I multiply it with and what will I divide it by? You can just type the answer in the chat function for me, please. Okay, the rest of you, do you want to put an emoji in the chat function just so I can gauge where you are? Are you confused? Do you not understand the question? Are you unsure? What's happening? Okay, so Tebe says, okay, we multiply with 100, which is the cost. So if a markup is on cost, cost is 100. That's correct. And then to get the sales percentage, we take the cost of 100 plus the profit, which is 50, to get to 150. Okay, now what is the last step that you need to remember to do in this scenario? What is the thing where they will catch you out? What do you have to remember? So there's one more step. What's the last step we have to do? I'm going to give you a little hint. Remember debtors? When we sell something to a debtor, who do we have to pay money to? Yes, Daniel, we need to calculate the VAT. Okay, so remember that 29,070 Rand is inclusive of VAT. Now, how do I get that inclusive amount to an exclusive amount? What do I need to multiply it by? Okay, so let me just repeat that. That 29,070 Rand is inclusive of VAT. How do we convert it to exclusive of VAT? Okay, and Tomato says how we do that is we multiply it with 100, which is the amount excluding VAT, divided by 115, which is the percentage for inclusive of VAT, to get to an amount excluding VAT. That's correct, Tomato. Thank you. Okay, so let's just put it up on the slide for all of you. Okay, sorry, I forgot to put the markup there. Okay, so we take the 2970. You can also divide it by 1.15, which will also give you exclusive amount. And then you do the trade, multiply with the 100 over 150. So that is the markup before trade discount to get to that amount. Or you can apply the trade discount, the markup first, and then remove the VAT. You can do it either way around. You will get to the same answer. Now let's see what the second question is. I know this was a difficult one, but the two key things that you had to see is that we have a markup on cost and that the amount we need to use is before trade discount and is actually inclusive of that to get to the correct answer. Okay, second question. When one divides the total of cost of sales column in the total of sales column, one arrives at a factor of 1.44. Given a constant markup of 50% was applied by Letsema Furnitures, one would expect the ratio to be 1.5. Why do you think there is a discrepancy? Okay, so if we take the total cost of sales, that's 32,101, and we divide it by the total sales, we would expect that our factor is 1.5. Now, why is it only 1.44? What do you think the main reason could be? What do you think could have resulted in a variance between the two? Okay, so I'm just going to repeat the question. So they're asking you, normally the markup is 1.5 or 50%. So we would expect to see 50% if we take the cost of sales and we divide it by the sales amount. But if we take the total cost of sales and you divide it, you actually get 1.44. Okay, sorry, it's the total sales over the total cost of sales. So we put sales over cost of sales. So why are we getting a factor of 1.44 as opposed to 1.5? What could be the reason for some of the discrepancies? What do you guys think? Okay, so Tumelo thinks it might be because of the VAT and the discounts. Okay, so Tumelo, you're actually correct. So the reason is it's not necessarily the VAT, but VAT could be a component based on whether it's inclusive or exclusive of VAT or zero rated or exempt. But in this case, everything had a reason. The main reason on this is because of the trade discounts that we received. When we worked out that cost of sales now, that 16,000, that cost of sales amount is before a trade discount, whereas the sales amount was calculated after the sales discount or the trade discount. So for that reason, your trade discount results in a variation in the percentage. And that's why there was a difference because of the trading discounts. Okay. Now, another thing could also be because of the fact sometimes rounding might also be an issue, but that wouldn't cause such a big difference, however. So rounding might also sometimes play a role in our calculations, depending on what type of rounding you use. Okay, now let's look at the Debtors Allowance Journal. Debtors Allowance Journal, like we said, those are the transactions where we return goods to our suppliers or we ask for a discount from our customers return the goods to us and they ask for a discount. Okay, so the question they had is no entry was made in the cost of sales column on day 9. Please explain why. Now let's see what the information was on the 9th. Runaway dealers requested a 20% rebate on invoice D1. The goods were not according to order, so they issued credit note DA1 to grant their request. Okay. So the question is, why is there no amount on the first line item and the cost of sales? So why haven't we recorded anything under cost of sales? What do you think the reason could potentially be? Okay, so I'm gonna repeat the question. So the question is, why haven't we made an entry in the cost of sales column on day 9? If you look at the Debtors Allowance Journal at the bottom, you'll see in the cost of sales column, the last column, there's an entry for every line item except the first one. Why do you think that might be? Okay, so just repeating the question. Okay, so Pamela thinks it might be damaged goods, question mark. Okay, Tumelo says, ma'am, can I ask, is a rebate the same as returns? Okay, Tumelo, no. A rebate is not the same as a return. A rebate is a discount. Okay, so you are thinking in the right direction. Tumelo, you're also thinking, was it actually damaged goods? Now, because I'm asking for a rebate, which is a discount, because of the fact that the goods weren't exactly what I've ordered. So I'm asking for a discount. I haven't actually physically returned any goods. Now, based on what I've just said now, why do you think there is no cost of sales in that column? That's correct, Sebi. No goods were returned. So we only include an amount in our cost of sales column if there was a return or goods actually moved. Okay, so that is one of the big rules. Something needs to actually have moved between cost of sales and inventory. If there's no movement, we actually do not show an amount there. So in this case, we haven't physically given or we haven't received the goods back. Our customer just said, okay, fine, these goods weren't exactly what we've ordered, so we're asking for a discount. But then we won't return it. So let's say, for example, it might have been printing. So we've asked them to print 20 copies on a certain gram type of paper, so the thickness of the paper, but now when they received it, it was maybe thinner paper than what they've requested, and the printing was maybe in black and white as opposed to color. Let's make that the example. So now instead of returning it, so they still have the information they wanted, but it's not exactly the way they wanted it. So now they're just asking, okay, fine, we're not going to return it, but we just want a small return or discount to make up for the fact that it isn't 100% correct. Okay. So that is why there was no cost of sales value. Okay, so I see I didn't put the general journal stuff on here because I didn't think we would have time for that. But let's quickly just talk about some of the questions on here before we wrap up. Okay, so the first question they asked you with regards to the general journal is the transaction on day 2, the interest on the loan has been recorded in the general journal and not in the cash book payments. Why do we record interest on a loan in our general journal and not in our cash book? What is the main reason for that? Okay, so I'm going to repeat the question. If we have a loan with a bank and they charge interest on it, why would we record that interest that was charged by the bank in the general journal and not in the cash book payments journal? What would be the reason? Okay, I'm going to type the information. Let's say we've got a loan of 10,000 Rand. In April, we repay 500 Rand. And the interest charged was 20 Rand. Okay, so now the question is, in our cash book payment, why have we only recorded the 500 Rand and not 520? Which means 20 Rand was recorded in our general journal. So why? Okay, so if I have a loan of 10,000 I physically paid 500 Rand and I was charged interest of 20 Rand on that 10,000. Why would I include that 20 Rand in my general journal and not with the cash book payment of 500? What's the main reason? Okay, so Tebe say that 20,000 we did not make a payment. Okay, so that's correct, Tebe. So that 20,000 isn't physically money that has moved. They've increased your balance with 20 Rand, but you haven't physically paid it. And we said in your cash book, payments journal is physical cash that have been paid. And for that reason, we put that 20 Rand, which increases your loan balance in your general journal because it doesn't actually fit into our cash transactions or credit transactions. And we said any transaction that falls outside of that scope will go to our general journal. And that is the main reason. Okay, so thank you, Toby. That was correct. Okay, so your homework for today is to go through the information in this chapter. So just read through the information regarding the journals again, if there's anything you need to recap, and then go through the example in your textbook, example 5.1, because that explains very nicely how each transaction is recorded in the journals. Okay, and then based on that, I want you to go do question 5.4. So that is where you now have to take this information and record it in the general journal. So that is where we debit or credit our account with the amount. So I want you to go practice that based on this information. I will load what you have to do for your LAC later this week and send out communication to that effect. Okay, so Tamila asked, ma'am, can you please explain the transaction on day 11 in the general journal? Okay, how was the amount debited to the drawings account on day 11? Okay, let's quickly read. Okay, I'm just going to share the whiteboard and then we type the information on there. So if we look at the 11th, they said the owner took a chair from trading inventory. Okay. Okay, so they took a chair, which is inventory, that was valued 750. Okay. And that is inclusive of VAT. These goods would have been sold at 750 had it been sold to the public. Okay, but now this is the sales value. Now what you have to remember, for drawings, it is what the owner took. You will, sorry, the owner will always take it, they will take it at the cost price and not the sales price. Okay, so what that means is we need to convert that 750 to cost. Now we said the markup was 50%. So that means to get it to a cost price, you would take the 750, we would multiply it with 100 over 150. But we also said that 750 is inclusive of VAT. Now, because it's for drawings, you will not be able to claim the input VAT on it because it's for personal use. So you will not take the VAT out. You will actually leave the VAT in. So the cost would be 500 Rand. Okay, so I'm just going to say for drawings, you leave the VAT in. Okay, but because they would have originally claimed the VAT when they purchased it, we will have to raise output VAT for previous input VAT claimed. So now we have to reverse the VAT to be able to correct what we've claimed previously, because we would not actually be allowed to claim it. So let's quickly see. Let me just find the question, 5.3. Okay, so how we work it out, you take the 750, you multiply it by 100 to 105, so the drawings amount is 500. But if I do the physical journal entry, I would say debit, okay, drawings of 500 Rand. Sorry, typing is not going too well. Okay, so I would debit the drawings of 500. Okay, I would also debit output VAT, which would be the 250. Okay, well, let's just say it's 250. And then you would credit inventory. Okay, now in this case, inventory would be 5. Okay, no, so, wait, sorry. So this would be credit. Okay, just redo this. Okay, I debit the drawings with the full amount. I credit inventory. Now that would be exclusive of VAT. So let's just say exclusive of VAT for the scenario would have been 400. It isn't. And then I would also raise the VAT 400. So what I've initially claimed, I would now have to pay over to SARS. So that is the journal. But that's how you do the calculation. You take the 750 and you convert it to cost, which is 100 over 150 to get to the 500 Rand. Okay. So I hope that answers your question, Tumero. Does that answer your question? Okay, so if you do not have any, do you guys have any other questions?